I'm going to get started because it is only for half an hour, and I'm so thankful for um, allowing me to take up half an hour of your time. So I'm just gonna make it short and sharp, because I feel like there is some things that um, business owners can actually implement today in readiness for 22. And it's the tiniest little things, but it can make all the difference, either to simplify your life or to make some tiny little financial changes that will be significant for next year, especially during the back of these 2 years that we've just currently had. I hope that these couple of tips will help you. So I'm just going to share my screen. Now, what I found is that working with a number of business owners, some of the financial aspect of a business is actually influencing their personal life as well. So some of these are a crossover between the business and yourselves. And because a lot of the time the business is either requiring cash flow from you personally to start a business, or it might be that you're in growth phase, so you need it to be paying your staff, and it's a loan to the company or the business, and vice versa. So you will see a bit of a crossover. Now, I hope you enjoy the next half an hour. So here we go. So I just wanted to do some practical tips just before the end of the year, because all the numbers are mumble jumble to a lot of people. My team of accountants have all gone to university to learn all of this, but we don't expect our clients to understand this. So we try to put it into lay terms. And so I just think that from a business owner's perspective, if I can give practically what you could do to help your day-to-day life, why not? Of course, keeping it simple. All right, the first one. This is a really easy one. And I find that when we look after the accounts for clients, these are ones that get questioned a lot because people haven't reviewed them. So the three easy ones that you can check today are software subscriptions. Like, how many of you know how many subscriptions are you tied up to on your annually and monthly basis, and what the value is for those? Because I can tell you now, in today's world, it just adds up so quickly, like just incredibly quickly. So you might just want to just check in and see which ones are valid, that the ones that you're actually using today. And even on a personal level, hey, I actually subscribed to this yoga one, and before I knew it, the annual subscription just clicked over again, and that was another $300. I'm like, far out, like, should have just cancelled that. So we do that in business as well. So that's an easy one. Just over the Chrissy holidays, just check in. Which ones are you getting? Which ones do you need to unsubscribe to, cancel? And all of a sudden, you've probably saved yourself, some dollars. The other one is your mobile phone plan. And I think this one's really from a personal perspective, because I just did this one recently for myself as well. Like, you just basically click over, month over month, and I'm not one to change my phone every 2 seconds. So, your plan just keeps going. And in actual fact, the telcos are doing their plans so regularly. And before I knew it, I was able to change my plan on I think it was like a no limit on data. Like, I mean, that's just crazy, right? So have a look at your mobile plan, see whether it's expired. Go and just check them out and see what they've got to say, because I certainly did that. The other one is lease for office equipment. So what tends to happen if it's a lease and not a chattel mortgage, a lease will just keep clicking over. And some of those leases are actually rentals. So which means there's no real end date unless you go and approach them and say, hey, my rental has expired on this date. And you literally have to make an offer of what you want to buy the equipment for or cancel it and return the equipment. This one is really quite, they're quite cheeky. So I would say get onto those leases, check them out and make sure that they haven't expired, and if they have, go back to the leasing companies and just check it out again. Or alternate, just make sure that are you on a lease where it does have an end date with a residual on it, maybe not, or a rental, which means then it'll just keep going until you flag it with them. Okay, next page. This one here is what is a gross margin? Now, I don't want to get too technical with this. I just want to flag it with as something that I address with clients all the time. So just to explain, it's your income, so your revenue, minus your direct costs equals your gross profit, and as a percentage is the gross margin. So I'll just give an example here. So a book income, $100. Your printing of your books is $60. Your gross profit is $40, and your gross margin is 40%. Now, let me explain why these numbers are really, they mean a lot to your business. Is because firstly, you need to identify what the direct costs are, because the common mistake that is made here is that direct costs go into expenses, your everyday expenses. Now, you should know what your everyday expenses are per month. You know, it might cost you $10,000 to run the business, whether you have revenue or not. The direct cost, why we want it directly related to the revenue, because the income is driven by that cost. So for instance, you're not going to have book income if you haven't printed those books, for instance. That's why it's called a direct cost. Now, if you're pricing in a particular way, this becomes a really important number, because dollar values will go up and down throughout the month, but you can be consistent with your margin. So if you, for argument's sake, for this example, say that your pricing model is the printing of the books, you know it's going to cost you $60. So you're making a 40% margin. Every month, as you're printing those books and getting those revenues, you can see the consistency of your 40% margin. Now, if it's less than 40%, and say it's hypothetically 20%, you might be giving a 20% discount to your readers, which is quite substantial when you convert it into dollars, especially if you've got a consistent $10,000 a month in your overheads. Another one is, which is quite a common one, is your hospitality industry. In your hospitality industry, the benchmarks is, if it's easier term to use, is that your revenue, your sales, you'll have 30% staff costs and 30% food costs. Now, by having the margin, you can identify if your costs are more than 30% because of your pricing model, it might actually mean that you've got a lot of wastage going on. You know, there's guys in the kitchen, they might be throwing out all this food and you're not even aware of it. So it identifies, you know, wastage or efficiencies, or it may even be that you're underpricing your product even. Hence the reason why gross margin is so important. So just over the holidays, when you're looking at your profit and loss, just identify what are your direct costs. It might be your people. It might be your, in here, in this instance, it's a printing of a book. Or it might be you're reselling a product. You're buying a product from a wholesaler and you're reselling it as an agent. Hope that makes sense. And of course, if not, I'm here. My tip 3 for the day is review your resourcing costs. And why I'm saying this is that over the last 2 years, people have either decided that the team are going to work from home or they're going to come back into the office. And if they come back into the office, are they fully equipped? Is their technology ready? Is their desk ready? And actually, have you got the real estate for them to be sitting in the office? Or vice versa, the other way. You know what? You've decided that your whole team are going to go remote. And if that's the case, then just look at all those costs, because I can tell you what, they all add up, especially technology. You know, if we're all used to working on laptops at home, but if you're going to come back into the office, you might want a double screen and you might want a bigger computer. And maybe the team want to change all of that. So then, of course, you want to, just look at those costs and budget them for next year. Don't be surprised when there's a tech bill that comes in for 10 grand to come back into the office. The other thing is also the ability to cross-train staff. If you've just found that maybe your revenue, you've got a different revenue model because you've pivoted your business over, the last 2 years, it might mean then you've got people that are on part-time. Now, say for instance, you've got 2 part-timers. You might go, what are their strengths? And you might bring them in and go, I think that the areas of the business, we could probably cross-train you and have coverage. And maybe, in actual fact, you may only need one person to do that role because you've been able to cross-train them. Anyway, all I'm saying is check in and just see what that looks like next year. Maybe this comes from personal experience as well, because my team are all coming back into the office as of January. So we've just got to make sure our technology is all up to scratch. Tip 4, is the business profitable? And all I'm saying here is, have you seen your numbers lately? Because I can tell you now, traditionally, the bookkeepers do not do monthly reports. That's just a traditional way of this industry. And of course, if you know me well, I will not allow my clients not to see their numbers each month. They must know their numbers. Otherwise, how on earth are you going to make any decisions? So if you have an in-house person or whoever does your numbers for you, ask for a profit and loss. Just ask for it. It might be even your accountant. Just check in. And when you've seen that, that's where all your changes may occur. In my tip 1, I said, look at your software subscription. And if you look at this profit and loss, you'll probably be horrified of how much you actually spend in software subscription. And what you may even do is change the chart of account to specifically say software subscriptions, because most people will just have the word subscriptions, and subscriptions could be a varying of things. Your network subscriptions. It could be anything, but you might just want to hone in and just make that clear. So don't be shy. Ask for it. All right. Tip 5. Oh, this is where I'm saying it might, cross over between business and personal. With all of our clients, I say, come on, your business bank account is not your personal bank account. Don't be spending the money in there. Otherwise, you'll have no idea where your cash flow is sitting. Pay yourself a wage. That way, you're not only on a personal budget, but you're also on a business budget. You can see things clearly. I think it's a false sense of numbers when you see your trading account and you just let everything sit in there and you think, oh, wow, like here I am. This is my position. In actual fact, is it really your position? So keep your personal and your business bank account separate. And if that means opening a different bank account, go and do it over the holidays, because the banks, they need to ID you now and your 100 points and all of that. So here's an opportunity to do it when it's a little quiet. The other one I like as well, which is the next level, is actually keeping your trading and your tax account separate. So literally every month when you get your numbers, see how much GST and see how much employee taxes you've got to pay for your quarterly bases. And every month, if you put that money aside into a tax account, it just means your trading account is your real money, like your real business money. So you know where you're up to. So what we're doing is we're separating, your tax and your personal. So your trading account is your real account. And even better, I know it sounds like I'm saying open all these bank accounts, right? But you know what? It creates a discipline and it'll give you a reality on the picture of the business. But if you can do this one, this is a bonus. I've got a client that calls this the happy account. So hence the reason I've said have a happy account. It's actually a separate savings account. And even if you just put a little bit each week aside, it accrues. And by the time you get to the end of the year, well, it's just nice to have as your little, side account. So I think it was appropriate to call it a happy account. So of course, my team are going, what are you talking about, Trudi? When we use this word, like, what is that? But our clients love it. So, all right. I'd like to say thanks, guys. Of course, I'm up for questions. I'm just going to stop sharing in a second. But this was literally an introduction to I were doing a series of webinars each month in 22. And again, it's just to take some practical takeaways from each month, because I find that after all these years working with business owners, and let's just keep it in lay terms to make it simple, eventually you create these financial disciplines in your business. And you know what? At the end of every year, by the time it gets to Christmas, when we have those big breaks, because a lot of businesses are seasonal, you have money in the bank to know that you've got wages covered, you've got money, for the start of next year, you know what you're going to be investing on, you know what you want to be doing. So tune in for this, you'll see. But I hope that it was practical for you. I'm just going to stop sharing my screen. So if anybody's got any questions, please feel free to either reach out to my email address directly. A copy of the slides will be sent out to you, so you can just recap on this, or otherwise feel free to give me a call. I'm here over the Christmas break. As you can imagine, we run many payroll runs, so we're officially closed, but of course over the Christmas we still have payroll runs that we must run. So yeah. Has anybody got any questions? I'm happy to answer them. We've got a couple of minutes. I hope everyone found this really useful and practical, and some takeaways that you can actually use for your business next year. Okay, one of the questions is, how much do I personally implement all this into my business? Yeah, good question. I am very much a person that does it in practice. It's a little bit like I don't even do my own accounts in Numeric 8. I have a designated bookkeeper for the practice here, and it just means it keeps me disciplined in not only we have a proper process in order, accounts process, but we also have an invoicing process, a payables approval process, having the separate accounts where we put money aside for tax. So here at Numeric 8, we run weekly payroll runs. So every week we put the super and the tax aside. So I'm on a monthly IAS, so that tax comes up pretty quickly, and it's a pretty nasty bill when it turns up every month. So of course I don't want to be seeing that in my own trading account. So a lot of these things that I'm sharing as a practical, from a practical perspective, I do myself only because it's the disciplines you absolutely need to go forward on. Numeric Eight's been around for 15 years, and there's no way it would be, I don't think, with the growth that we've had and the amount of people we have in the organisation, you can organise growth and have the cash flow for growth, especially when it's reliant on people, and especially on weekly payrolls, and your invoicing is monthly. You really have to plan for it. So setting these disciplines are so important. So thanks for the question. All right, well, I'm going to leave it there. Thanks, guys, for joining. I know I just wanted to make it a quick half an hour because I know everyone's just ramping down or up to get to Christmas. But I just wanted to do an intro to the webinars that we're going to be doing next year, so everyone can just take little snippets and hopefully set those disciplines and help them in business. So I hope you all have a lovely Christmas, and drink lots, eat lots, and spend lots of time with the family. Thanks, guys.